Thumb Trading. Now we are going to see Nifty end of the day analysis of 27th of July and the trade setup for tomorrow. See, this is an expiry day. Today is Thursday, and we'll see where the market open. Here, this is a gap up, right? And it is above H4. So, until and unless it is above this H4, we are not going to take a trade. And also, we'll observe whether there is a resistance, any important level on this range, because the market has not a breaking of H4, right? It's just in the space, like it is not at all at H4, H5 or H4, right? So we'll see in the daily time frame whether there is a important level for us to mark, and based on that level we'll have some price action. And observe here, this is the range, right? Whenever the market pre-market opens, you should always see this daily time frame and mark a level if there is an important level in the daily time frame. If there is no important level on previous days, just avoid about taking a decision with daily time frame. But here this is the opening, right? And this is the place, it is very important level, because this is a opening and this is a closing, so it is going to act as a major level. And so we'll just mark this as a major level, and we'll go to our time frame, and it's 5 minutes time frame, and see where the level is. So if you observe here, this is the level, right? So it is going to act as a major level for today, and if it breaks this H4, then it is going to act as a bearish side. And observe the first 5 minutes candle. It is a bullish pin bar, right? But why we are not onto the call position today? Because there is no strength on this candle. If it is a supporting candle and taking support at H4 and it is a pin bar on the downside, then there is a chance of bullishness. But what happened here? There is a big wick on the downside and it is a bullish candle, so there is no strength. So overall, we are not at all onto the call side, and we are just waiting for the candle to close below this H4, and after this closing of H4 you can go for the put position. And observe here, there are almost 6 candles above before breaking this H4, right? So you should be careful while before going to the entry. So this is a clear double top formation and a breakdown from H4. So when it breaks H4, then we can definitely go for the put position. And also we have a major level, that is in the daily time frame the resistance was also clearly a breakdown. So that was the reason we are very sure about our put position, and your target will be up to this 200 EMA. You can take your profit at this 200 EMA. Though the market has moved a lot today, we have certain rules to follow every day, right? So based on that, we should exit without taking more profits. We can't expect total market direction for the whole day, but sometimes it happens. You see, if you see this previous day high and this previous day low, it's also a strategy like breaking this previous day high and previous day low on the same day with this trendiness. Then again the market is going to fall, and it has clearly it's a clear fall, right? And it may reach up to at least 70 points after this previous day low and this previous day high is broken. If you observe here, this is our strategy and it was over. And if you miss to take that strategy, then you can think about taking put position only at this point, because you can avoid this consolidation, right? When it has clearly broken this previous day low, this point. But you should wait for some time for the retracement of this 20 MA. Then you can think about taking the trade. And where will be your target? Here this is a daily resistance, this is a HL5, but there is resistance here and here at this point, so you can exit at this point. This is almost 100 points movement from this previous day low. So there are two trades you can take today, but if you have a good profit with the first trade, just avoid no matter how long the market is going. We should never think to capture those days, because it happens only once or twice in a month. So you should be with your rules, you should stick to the rules only. And we'll move on to the next day, and this is going to be the wide CPR for tomorrow, and tomorrow is Friday, and it is going to be volatile for tomorrow, and it all depends on the opening location of the market. And if it is a gap up, see, this is 19,700, right? If it wants to be a gap up, it will be around 19,800, so it will be a 400 points movement, right? If it is at this point, if it is a reversal, then your target will just be above this top CPR only, because it is almost 70 points movement. If it is gap up, it will most probably try to sustain again at that point. So if you take a put at this point, your stop loss, you should be very careful about taking a stop loss for tomorrow before thinking about your target. Our prime important thing is to think about your stop loss, right? So you should have a minimum stop loss. If you can't get that minimum stop loss, you should be away from the market. You should just observe the market. So if you see this, if it is a breaking of H4, then your target will be up to top CPR only, and anything can happen at that top CPR, and it may reverse from that point. And also another point here, if it is in this range, if it is a flat opening, and this is also going to act as a major support for tomorrow, and if it is a clear bullish pin bar, then you can think about taking the call position, and there will be a quick reversal from this point. And also this L4, that is 19,510, is going to act as a major level for tomorrow, because there is a 20 EMA retracement in the daily time frame with this L4, so it is going to act as a major level for tomorrow. If the market is at this point, a price action will be very crucial at this point, and you should take a clear direction. It may act as a support at this point. If it is a down to this, again it is going to act as a resistance. Thank you. I hope this video will help you. Please subscribe to our channel.